Traders at UBA expect FAAC inflows and coupon payments on the 2029 and 2049 papers to boost system liquidity as demand persists on the newly issued 24th April 2025 bill. Kenneth Onoha, team member, Assets and Liabilities at UBA, joins me now for more market updates. Kenneth, thank you so much for joining us on the show today. We saw liquidity open in the repo, and now we are expecting a bigger boost from the FAAC inflows and also the coupon payments to inject some liquidity into the system. Talk about the volumes here, what we see panning out and the expectation.
All right, thank you for having me, David. Good afternoon to you too. Like you rightly did point out, yes, the liquidity system has been one that has been in a squeeze lately. We have seen depressed liquidity levels all through the week. It at some point hit over 1 trillion in repo during the start of the week on Monday. Following FAAC inflow that did come in sometime on Wednesday, we saw that this helped to elevate the liquidity situation, and then that naturally led to the opening balance yesterday that we saw of about 389 billion. Interesting, a few minutes before I got on air, we saw another round of inflows from to states, signature bonus actually, and that automatically would also help to cushion the effect of the liquidity squeeze that we have experienced. We would also like to add quickly that what we do expect, of course, is the bond coupon payments that did come in for 2049s and 2029s that came in today. We'd expect the 2032 bond payments for about 53 billion to also come in on Monday. And so, yes, that would also help with the tightness we've seen in liquidity. That, of course, has propelled, has caused a decline, a modest decline in OBB and overnight rates to about 27 and 28% levels.
Exactly. And in terms of the broader market sentiments now, we're also seeing the 2034s also see buy interest being sustained while we saw other parts of the curve remain calm. What's the expectation as we go into the new week? Yes, I know we don't have any auction in line right now, but in terms of market movements and investors' expectation, what should we expect?
All right. Yes, again, you did point out clearly that we have expectations. Of course, nothing is happening next week in terms of auction. The auction is supposed to be scheduled for the 13th of May sometime, and that's in 2 weeks' time. But at the moment, yes, because of the liquidity squeeze, of course, the bond of buying interest has been the 2034s, and the reasons are not far-fetched. We saw that it, of course, was up on offer at the last auction, and then the yields are pretty high at this point. So as an investor, you're always looking for where you can get the high returns on your investments. We'd expect that, well, if the liquidity is continually managed as we are, we continue to see improvements, the rates will, of course, will continually go down, and then that is what we expect to see on the bond side.
Yeah, Kenneth, before I let you go, in terms of how the pendulum is swinging with the FX market now, we are seeing the Naira fall against the greenback. For you, in terms of stability of the local currency, how do you see that panning out for next week and price pegs, if you would?
All right, so at the start of business yesterday, NAFEM, we saw markets trading at about 1,000, as high as 1,400 levels. This is the first of its kind, where we're in a very long period following the rebound of the Naira. However, interestingly, we saw that as the CBN did intervene during the course of during about midday yesterday, where most of the $100 million was actually sold to a specified number of banks. That, of course, did help with moderating the rate. As at close of business yesterday, NAFEM closed at 1,308.99. Of course, that has steadied the rise of the depreciation of the Naira to the dollar, because as opposed to the sharp increases we've seen over the past couple of days, we saw this moderately tempered, and so that, of course, is what we'd expect to see. This current undulating nature of the Naira against the dollar, that we'd expect that would help eventually in the price discovery that we're hoping to see, and then the price stability that we expect from
we'll leave the conversation here for now. Kenneth, thank you so much for your time on the show today. That was Kenneth Onoha, team member, Assets and Liabilities at UBA.